Well, good morning, everyone. Welcome to our Wednesday morning open house session. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so. Now, what you're looking at here, for those of you who are new to the room, I'm going to give you a real quick overview. This is the diversified trading system, and it's diversified because we're looking at the market from three different points of view. Here in the top left, we have the Hawk Micro Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader, and the bottom right is the latest addition to the DTS family. This one is called the Raptor. The Raptor actually incorporates elements of the other three birds into one chart. So it's kind of like a hybrid. The charts you're looking at here are the NASDAQ. I've also got soybeans and crude oil up on my other monitor, but I would be happy to take a look at any market which is of interest to you. I'm sure there's a couple e-mini traders in here, or maybe gold or one of the currencies, whatever you would like to see. So we've just had the opening bell. Let's take a look at where the market's been in the overnight. It had a rather substantial run up. You can see the London Open was right about here. This is on our Falcon Swing Trader. Yesterday's session, kind of waffling. You know, a little bit of a run up and a move down, kind of range bound for the most part. And then in the overnight, out of the London session, we had a trend change signal come late in the London session, right about here. Now, the trend change signal on the Falcon is pretty easy to identify. It occurs when the trend line changes color. So we had the trend line go here from red to green, and then we produced a signal, a buy signal. Now, the signals all produce the same way, regardless of the tool. They all begin with a warning dot and an audio alert, and then they print a triangle and a hash mark to let you know that the signal is complete. And you can see that this one just had exceptional follow through to it. Just prior to the open, we printed a trend change signal to the downside. That's this one right here. You see, here's the move lower. Here the trend line changes color. Here the buyers are fighting it back, and then here come the sellers. Here's our triangle and hash mark telling us that the signal is complete, and we have a little bit of a move lower. I'm just going to mention this to you really quick because the ultimate support and resistance suite, which are these lines that you see here, this is an add-on indicator, meaning it will work on any chart, not just DTS. And the reason I mention it to you is today is the last day that it is on special. And let me get you the information to that if you're interested in finding out about it a little bit more. We spoke about it more last week, so I'm not going to go through all the details again, but here's the link to the Ultimate Support and Resistance Suite, and the discount code to get 20% off is USNR20, and that is good. So I put those in the chat window there. That discount is good until quarter to midnight Eastern time tonight. That's when the discount ends. You can see that the market took a fairly decent bounce off of the primary resistance line here, and that kind of spurred it on. Normally when we get a bounce or a break of the primary resistance or the primary support, those are these blue lines here, you see. We expected to move 2 zones, but it moved much further. It actually ended up moving 4 zones before it ended up failing. And here we are on the Falcon now, perhaps generating what we call a late filter entry signal. Now the late filter entry signal, the trend line does not change color. The filter goes out of sync and then comes back into sync. So we're waiting for the filter to come into sync. You can see we've got the warning dots. but we don't have a complete signal yet. Oh, and now our trend line is changing color. So it looks like that late filter entry signal is not going to come together, but it's still early. Oh, wow. No wonder the market looks so bullish. Jim's shooting me some advanced decline numbers here. It looks like we've got just shy of 2,100 buyers and just short of 500 sellers. So the advanced decline sitting at about a positive 1,600, which is, you know, on the surface fairly bullish. But remember, if you're following something like advanced decline or indicators of that nature, that they tend to be relative to each other. So even though that number is fairly bullish on the surface, it still can become bearish if all of a sudden the advanced decline numbers start to tail off from that point. So I'm just going to let the dust settle a little bit here. We're only about 5 or 6 minutes into this session. We are producing a first micro-macro cross signal here on the Hawk. This tends to be a very reliable signal. Maybe I'll dial down the risk. Oh no, they're going to run away on me. All right. I was going to say I'll just throw a onesie on it. And if I was trading a single, I would usually remove the profit target and just see how far I can go with it. But like I say, it's still early, so we're going to give them a few minutes to settle in. We have a little bit of a range. Nothing quite as serious as what we saw yesterday, but it looks like we have a little bit of a range in here. All right, so we'll put that away. The Eagle Trend Trader, let's take a look at this. The Eagle Trend Trader uses this band through here to give you your directional bias. So here the band is bullish. We call this the soft edge. We call this the hard edge. So when the soft edge is above the hard edge, we're looking to buy. And actually, oh, did that come out of the open? This is a red bar buy signal. It's a very strong signal. Oh, it did too. It just printed out of the open. The red bar buy signal occurs near the hard edge or at the hard edge, and it's a buy signal. So you can see we got green bars, or pardon me, green dots, green triangle, green hash mark, but we have red bars. Very good follow through on this signal. A very high probability signal. Now, if I took it at the hash mark, would we be at our profit target yet? Yes, we would. Oh, the advanced decline getting stronger still yet. Oh, thanks, Josh. What would I do without you guys? Jim shooting me advanced decline numbers, Josh reminding me about the news. So Josh says there's news at quarter to the hour, top of the hour, and then the bottom of the next hour. All right. Oh yeah, well, it's crude inventory today, isn't it? So Wednesday. Wednesday is crude day. Okay, question here from Deborah. Debbie's asking, are the trend indicators moving averages? It looks like the one with the arrows is either a mid-Keltner or a mid-band Bollinger. Are the trend indicators moving averages? All right, well, we've got a couple trend indicators on here, so I'm just going to cycle through them and hopefully I'll hit the one that you're referring to. I think you're referring to this red and blue squiggly line through here. That is actually an ATR line. And the stock Eagle does not usually display this unless Ben has changed it in the programming. Mike Filigera is the fellow who trades the stock market with the DTS system. So even though I'm just focusing on the indices and the futures markets, you can literally trade any market you like. You can trade the Forex market. We have a few traders trading Forex. Mike Filigera trades the stocks. We've got a couple other people trading the stock market. I focus on the futures. Long story short, Mike Filigera started using, he's got a thing for the ATR line, and he said, you know, Eric, you'll get better results if you wait for the signal to sync with the ATR line. And lo and behold, he was absolutely correct. So we've added the ATR line as a filter. If that's not what you're referring to, if you're referring to the Eagle band here, that's part of the programming, as part of a programming algorithm. I don't really know all the particulars. The Eagle, there were a few contributors. The only one who really knows what generates that is the programmer. And if your last question was regarding this fancy little tool up here, this is called the Trade Forecaster. And the Trade Forecaster, this is another add-on tool, by the way. If you would like some information about the Trade Forecaster, you can find out about it right here. I'm going to shoot you guys a link. Now, the Trade Forecaster does exactly that. It forecasts what the current market environment is and what the next one is likely to be, and about how long it's likely to last. So we're in trend mode here for only about another minute. Excuse me, after which time we're going to move, oh no, sorry, we're in swing mode for another minute, after which time we're going to move into trend mode. Now, trend mode, a lot of people get confused. They think trend mode, oh goody, we're going to get a big trend. Okay, we're in trend mode for about 23 minutes, it says here, after which we're going to move into scalp mode, which is not good. Well, I shouldn't say that. Let me explain. Trend mode does not necessarily mean the market's going to take off like a rocket. Sometimes it does, but not always. What trend mode means is that your pullbacks are going to be minimal. The market is going to be calmer, it's going to have a smoother progression. It doesn't mean that you solely focus on your Eagle trend trader. We might still be printing signals here in the Hawk Scalper or the Falcon or the Raptor. But knowing that we're in trend mode, that allows me to do a couple of things. It allows me, if I'm expecting the market to make a smoother progression, I can perhaps run a tighter stop. I can perhaps stretch my profit target so that, you know, maybe I'll put a runner in play. I'll put a runner in play, I'll short, and see I've got 4 contracts, I'm taking profit on 2, and I'll have 2 on as a runner because I'm in trend mode. If I'm in scalp mode, the market's probably going to look a lot more like it was yesterday. It was in scalp mode for pretty much the entire morning session when we were trading it yesterday. And you get these wild swings, less follow through, bigger chop. So what does that tell you? Well, it tells you that you may have to run a wider stop. You maybe want to consider going all in, all out on target. You know, take your profit when you have it because the market's going to be a little bit more volatile. So that's what the Trade Forecaster is telling you. All right, so we'll see. We'll see how that develops. A 20-minute trend is not all that long. Josh is asking, Eric, how do I remove the background lines or the background arrows? I'll show you, Josh. You go here to your indicator panel and you find your tool, in this case the Hawk Scalper, and you roll down here to the very bottom and you can do your arrow location. You can even eliminate it if you don't want to see the arrow. But what you're probably interested in is this one right here, the background opacity. Yours is probably set at 2. If you set it to 0, you'll get rid of the background lines. All right. So you can see here on our Hawk Scalper, we're seeing quite a few yellow bars. Yellow bars are a bit of a no-no. We tend to ignore the market when it's printing yellow bars because this is telling us the market is very neutral. There's not really much directional bias to it at the moment. Okay, great questions from you guys, and I am going to get to them all. Chris is asking, what's the difference between these indicators and the Ichimoku cloud? Well, I know it looks like a cloud and occasionally it will slip and we'll call it a cloud, but it's not the Ichimoku cloud. This programming is unique for the indicator. What makes the DTS system so unique is that these are not just the same tools reprogrammed at higher time levels. You know how you try to approximate short-term, mid-term, long-term by maybe looking at a 5-minute chart and a 30-minute chart and an hourly chart? This is not that. So this program, this chart up here, the Hawk Scalper, has been specifically designed for scalping trades. The programming behind this is unique and it focuses on those market conditions that are prevalent when the market is producing short-term signals. Likewise, for the Falcon Swing Trader, the programming is unique. It's focused on those signals that occur when the market produces midterm signals. And likewise for the Eagle, we're focusing on signals that produce when the market is producing long-term signals. So here's the Raptor, and the Raptor, as I mentioned, it incorporates elements of the other 3 birds into one. So we have elements of the Hawk, we have elements of the Falcon, and we have elements of the Eagle. You probably already recognize the band from the Eagle right through here. And it looks like we produced a buy signal out of here out of a double pullback. It was a rather extended double pullback. The double pullback on the Raptor just means we're looking for a signal to move into the hard edge twice. It comes out, produces a signal, and that's a fairly reliable buy signal. It looked like it had good follow through. We're struggling at the highs now, so I'm just looking to see whether we're going to get another chance at that one. This tool you see right here, this is the latest tool. This is called the Geiger counter. And the Geiger counter is essentially a tape reader. Again, these add-on tools can be used on any chart, not just specific to DTS. And the Geiger counter shows you the market flow. But rather than try to read the time and sales, which will make you go crazy or cross-eyed, the Geiger counter plots it for you. So you've got the tape reader here. You can see the dial fluctuating quite violently. Normally it's a little bit more sustained. It's nice to see a little bit more action in the market today. And then of course we've got the eagle, or the needle, which is turning on full bullish mode here at the moment, plotting very strong. And now the buying is letting off a little bit. We'll see whether or not that little island there of buying ends up being a blowout on the buyer's part. The Geiger counter also prints this little envelope. It's called a trend indicator, short-term trend indicator. So it helps interpret what some of the numbers here are telling you. And right now, the short-term trend indicator says that the market is in a short-term bearish state. So if you were long, let's say you ended up buying the signal here, and you're starting to print these types of situations, you might choose to roll your stop in a little bit tighter. Perhaps protect some of that open profit. All right, we'll see if we can't snag a trade here. Debbie was asking, do you trade the E-mini live? I'll put the E-mini up for you. I'll tell you the thing I have with the E-mini, and the E-mini is a great market, don't get me wrong. But I feel you get more bang for your buck trading the NASDAQ or even the mini Dow. The E-mini, of course, trading at 1250 a tick, and the NASDAQ and the mini Dow both trading at $5 a tick. So that means that you can actually trade 2 or sometimes 3 times as many contracts on the NASDAQ or the mini Dow as you could on the E-mini S&P. And as we all know, it's much easier trying to manage multiple contracts versus single contracts. And what I mean, of course, is let's say we took this first micro macro cross signal right here. And let's say we did it like this. So here's our warning dot, triangle hash mark. We have a complete signal. I'd probably set it up like this. Okay, so I can take 3 contracts. I'm going to take profit on 1 and have 2 on as a runner. So right there, I've taken my profit. I've got 2 on as a runner. But if I were trading the E-mini and I set up the trade the same way, I would probably only have a single contract. So then it comes time to my profit target, and it's, do I want to take profit? Do I want to let it run? What do I want to do? The management is just that much more difficult. And here, let's bring the E-mini over now. Here's the E-mini S&P on our Hawk micro scalper. Oh, these little blue dots that you see here, this is the stop strategy. This is our trade manager. I turned it off on the other one so it wouldn't look too confusing. We have 16 different stop strategies to choose from, and they're all fully customizable, so you can adjust them however you like. And what happens is, if we were in this order, the trade manager will automatically manage your stops for you. I'm going to show you that in a second. I've missed a couple good trades already going over a few things here, but I'm going to get down to it, see if we can't take a couple trades or 2. All right, so here's that comparable signal. Oh no, that one came a little bit late. So where was that signal? Probably right, well, this one right here. Looks like that's the same signal we were looking at on the NASDAQ. So I trade it like this, and you can see I can only get the 1 contract out of it. So now what do you want to do? Do you want to take profit? Do you want to let it run? See, that's the problem with trading singles. And that's why I tend to gravitate toward markets like the NQ, the YM, that's the NASDAQ, and the mini Dow. So here's the E-mini on the Hawk. Good macro pullback signal here, just going into the open. And just a basic 3-bar or 3-arrow consolidation here. So that one looks like it had some decent follow through to it. What you should know about the E-mini is that a lot of people think the E-mini because it has the higher tick value, you're going to earn more money. And that's not the case. A $50 move in the E-mini will usually have a $50 move in the Dow or the NASDAQ. So the move, while it may be fewer ticks in the E-mini, it does tend to be dollar for dollar. So I really don't see that much advantage to trading the E-mini, other than liquidity. Granted, the E-mini has got huge liquidity. So if you're trying to dump 100 contracts on the NASDAQ or the mini Dow, you might slip the market a bit, whereas the E-mini will suck up 100 contracts, no problem. Working on a possible trend change signal here on our Falcon. This is again on the E-mini again, so you can see our trend line changed color. Oh, actually a late filter entry signal. This tends to be a high probability signal. So you see how the filter went out of sync down here? The trend line did not. Produced a sell signal. We might be seeing the E-mini head a little bit lower. I'm not going to get too aggressive on the sell side just yet because it's obvious we have a bit of an uptrend here to deal with. I don't want to be stepping in front of the bus. And we might as well take a look at the E-mini here on the Eagle while I have it up. So yesterday's session, pretty subdued. Today, nice little rally in the overnight. And the E-mini, no signal out of the Eagle Trend Trader just yet. So the E-mini not quite as active as the NASDAQ. And things have slowed a little bit here in the NQ after that early run up. That may have been the move of the day. Oh, yeah, Mark says that was the shoot. Did my charts not sync? What the heck? No, they didn't. All right. Thanks, Mark. Mark says I was showing you guys the soybean market. It looked a lot like the E-mini. Well, now I don't need to show you soybeans. Hold on one second and I'll get you the E-mini Falcon. And Eagle. I thought I had my charts set to sync together, but obviously. Oh, well, that looks a little better. Here, let's bring this over now. So here is the E-mini. Good thing we're not getting that trend change. I was wondering about that. That the hawk would look so bullish and then the soybean, well, the Falcon chart looking like it wanted to turn over. So here's the E-mini now. Yeah, in the overnight, big run up. Out of the gate right here, produced a trend change signal. We're still working on that one, I think. And now working on a late filter entry signal. See, the filter went out of sync, came back into sync. The signal printed didn't engage yet, so there's an opportunity for you if you're an E-mini trader. But if this keeps slipping, oh yeah, now the trend line is changing color. So that signal is void. And we'll bring the Eagle Trend Trader over here. Again, big run up in the overnight. We did produce a signal here out of the open. And I'm stretching the target here a little bit on the E-mini. Normally we have a $200 profit target, and look at that, just kissed the profit target and then turned on its heels. All right. Okay, is that going to be the range? Yeah. Debbie says, when I watch the NQ, it feels like the wild, wild west. Do you have any issues with your fills? Not usually. The other day when the market was kind of stagnating, we would get slipped a tick or two. But normally my positions range between 2 and 4 contracts, and it doesn't seem to have any problem filling those. And I've never encountered any real dangerous slip. You know, if I do get slipped, it's usually only for a tick. And usually only when the market is very, very quiet. And speaking of very quiet, oh, way to go. While I've been talking, Jim's been trading. Good job, Jim. Jim says he shorted the YM at 58, out at 37, 21 ticks on 2 contracts. Well done, Jim. Nicely done. Yeah, if you're concerned about the NQ, the YM is definitely a calmer creature, the mini Dow. All right, we're getting a little bit of a mixed bag of signals here now. Look at our hawk. We're getting all these yellow bars, and you see how they're all trading at more or less the same latitude? That tells me that the market is getting a little bit stagnant. Might be getting a little bit choppy. The Falcon is starting to produce more trend changes. So we're producing now an early trend change signal buy, but because we're starting to waffle a little bit here, see our filter is breaking up, I'm not all that interested in buying it at the moment. We came into another of our resistance zones, and that kind of stalled the market a little bit. If it gets back down here and produces a sell signal, I might try to short it. I'm not big on counter trend in spite of what you see me do sometimes. All right, if I shoot a trend line, we're looking a little bit like that. I'm going to adjust the trend line ever so slightly. There we go. And you can see our trade forecaster is starting to waffle a little bit too. We're coming out of scalp mode, going back into trend mode. Normally it doesn't cycle quite this quickly, which also tells you that the market is maybe in a transition. Oh, I hate it when they go to the extremes. Debbie's asking, does the trade manager work with NinjaTrader? Yes, it's people ask, why do you do this on NinjaTrader? Why don't you do it on MetaTrader or TradeStation or something? Those other software packages are fine. There's nothing wrong with it, but NinjaTrader is the only one whose programming is actually robust enough to enable us to build a tool like the Trade Manager. The Trade Manager is this tool you see here on the right-hand side. I've already shown you the different stop strategies that we have. The real feature of the Trade Manager, besides the trade management, is this risk component, where you can restrict your risk to a certain percentage of your trading capital. In this case, I've got it limited to 2%. So that means that no matter how I structure my trade, this isn't a buy signal here, but I'm just going to use it for example. If I structure my trade this way, and I've got my auto targets turned on, notice my risk amount is $400. Now watch, my risk amount is not going to change. So I can put my stop down here. Oh, okay, I'm on the cusp. Let me put it a little bit deeper. Oh, all right, bad example. I'm running into rounding errors. There, my risk is still about $400. I could even risk it way down here. Oh, went a little bit too far. See, the trade manager won't let you take a trade you cannot afford to lose. So let's see if I take it way down here. Okay, my risk is still about $400. So it controls my risk. What a lot of people do wrong is they overextend themselves on their trades. They get themselves into a position that they can't afford to lose, and of course that's the one that goes sideways. Oh, well done, Mark. Mark knocking it out of the park. Mark says, I love it when all three birds sink. I've managed to exceed my $500 goal with 3 separate trades right after the open in the NQ by taking all 3 bullish signals, the Hawk, the Falcon, and the Eagle, that they produced out of the open. Now I'm back in sim mode. Another early day. Well done, Mark. Good job. That's fantastic. Yeah, you know, the NASDAQ's been funny of late. It's almost like you got to jump on that first signal, because traders are getting busy right out of the open, and then they go to sleep. The tool that we have here on the Raptor is slightly different than the Trade Manager. You're going to notice we don't have this risk component down here. This one is called the Trailblazer. And what makes the Trailblazer unique, we had Trade Manager owners saying, can you make it a one-click system? Because, see, I've got, even with my auto targets enabled, I got to click, I got to click, I got to click, and then everything is active, right? So I've got to set my parameters, I've got to enable my position. Oh, well, we might as well let this one ride. It's a first micro macro cross. And hopefully it'll go a little bit higher here and you'll be able to see how the trade manager rolls the stops automatically according to the stop strategy. So I think we got slipped a tick on this one, did we? I didn't see it fill. Go the other way. Here, I'll roll my stop back a little bit. Come on, get up there. I want to show you how to roll the stops. But anyways, that was the issue with the trade manager, is that if the market was moving really quickly, some of the owners said, well, can you make it so it's a one-click system? And that's where the Trailblazer originated. Now, if you're using the Trailblazer, you're going to need to know more or less what your average position size is. Because the Trailblazer, see, currently I've got one contract with a 20 tick target. I've got another contract with a 0 target, which means it's going to be a runner, which means I'm going to have two contracts in play. So let's say I'm going to run an ATR stop strategy. Now, as soon as I hit the buy market button, and then we don't have a signal here, but I'm just showing you how this works. If I hit the buy market button, I have my order, I have my profit targets, I have my stop loss. See, it's all fully automated, just one click and you're in the trade. So that's the strength of the Trailblazer. The downside to the Trailblazer is that we don't have the risk management component that we have here on the Hawk, or pardon me, on the Trade Manager. So there's a little bit of a trade-off there. But there's nothing like this available to the retail trader. This tool will prevent you from blowing yourself up. And I'm not kidding. This tool will never ever allow you to overcapitalize a losing trade, nor will it ever allow you to undercapitalize a winning trade. I'll let that sink in for a moment because it's so important. You know how most traders trade is they'll take a, oh, I want to show you how the stops roll. Yes, that's what I was doing. So we'll go to something a little bit more aggressive here, like the ATR. There. We'll see if we can't get a stop to roll, and you'll see how the trade manager will automatically roll the stop up here. So this frees me up to look at other charts, right? I can look at other opportunities. I don't have to worry about managing this trade because the trade manager does it for me. How most people trade is something like this, though, is they'll say, oh, I'm a small account trader. I'm going to trade 3 contracts. So they go out and they take their first signal on 3 contracts, and let's say they, I don't know, take a $400 hit. And they say, oh, okay, well, I'll take another trade, and they take another trade, and they take another $400 hit. So now they're down $800, and they say, okay, well, obviously the market isn't behaving today, so I better scale back. I'll only take 1 contract. So now they finally hit a winner, but it's only good for, say, $300. So they're still down $500 on the day. All right, that's how most traders trade. They overcapitalize when they're losing and they undercapitalize when they're winning. Well, this tool won't allow you to do that. This tool always restricts your risk to 2% of your capital. Very, very important. All right, I was hoping I was going to be able to show you how the trade manager rolled the stops, but it's not cooperating. We'll see whether we get an uptick here, and you'll see how the trade manager will roll the stops on the Raptor. Ooh, bad habit, Deborah. Debbie says, my challenge is loading up when I'm losing. Oh yeah, that's a real bad habit. I spoke to a lady who blew a $20,000 account in a single day doing exactly that. A good thing to avoid. So I think we're actually going to get an uptick here, and I might be able to show you how the trade manager rolls the stop. Otherwise, you're going to have to take my word for it until I find another opportunity. Okay, Deborah's asking, can you please explain that a little bit about the money management and stuff? And I will. Let me get into that. Okay, here's a great little tool. We're just going to take a little detour. I'm going to show you this tool real quick. This is called the Money Expert. And you can go to Indicator Warehouse. It's free to use. You just put your email into the little window. Don't worry, we're not going to bombard you with a bunch of stuff. This is how the average trader trades. He's a small trader. He says he's going to be careful. He's only going to trade singles. He starts with a $10,000 account, and 100 trades later, he's run it up to $17,000. Fantastic. Okay, well, this one's a little bit, I don't like to see it like this because this is more one of these mathematical things. But mathematically, if he had taken that same 7,000 winning streak where he ran 10,000 to 7,000, he could have, using correct position sizing, ran it up to about $500,000. Now, before you laugh, I do know one fellow who ran a single contract up to $40,000 by using position sizing. He started with a single, and then using position sizing, he ran one trade up to $40,000. So here, let's get to the example. So the key is position sizing. You're limiting your risk to an amount you can afford. So this little tool allows you to play with this. You're going to start with a $10,000 account. You can change the sum to whatever you want. But look, we're only going to be 50% profitable. How many times do you chase around signals, adding this, taking that away? Oh, let's throw Bollinger Bands on. Oh, let's throw stochastics on. Oh, let's put, moon cycles on, whatever, trying to eliminate losing trades. We're going to be wrong half the time, but here's the key. We're only going to risk 2%. Okay, I like this. This is more realistic. So Joe's line is this blue one. We're the green line. Joe starts with 10,000. 100 trades later, he's up to about 14,000. Now, our line wins when Joe wins, loses when Joe loses. So you can see here, out of the gate, the position sizing actually cost us a little bit. Joe lost, looks like maybe about $500. We lost about 1,000. But as our losses were increasing, our position size was decreasing. So we were never risking more than we could afford. But look at what happened when Joe started to hit a win streak. Look at how much more our winners added up to his. So he ends with $14,000 trading singles. Fantastic. We end up with $19,000. This is how you're going to make money as a trader. Just real quick story. One of our DTS owners was a onesie, twosie trader. And he said to me, he said, Eric, I would win a little, I would lose a little, but let's see, I think I actually wrote down what he said because it was so profound. Yeah, he said, the real secret of trading is you can't make it trading singles. You have to trade multiples, but you don't want to risk more than you can afford to lose. If you click on this chart, you can actually get the breakdown. So Joe's profit was $14,007. Our profit was just shy of $19,000. His gross profit was $8,300. Ours was $16,007. His gross loss was $3,600. Ours was $7,800. His average winner was $200. Our average winner was $400. His average loser was $62. Our average loser was $132. And when you scroll through here, you're going to notice that there aren't any real home run trades. It looks like this is the biggest one here at $400. But there's not going to be any $1,000 winners in here or $2,000 winners to skew the results. These are your bread and butter trades. Yeah, see, here's another 400. But look at what happened here. Joe, 72 trades in, Joe was still winning for $400. We took 3 contracts. We made $1,200. That's what's going to differentiate you from the average Joe. Sorry, bad pun. Okay, so here his last trade, he made $300. We made $900 because, look, at that time, our account was to a place where we could afford to trade 3 contracts. All right, so just a real quick little lesson on position sizing for you. And we still didn't get a chance to roll that stop. Yes, Deborah asked, so it automatically adjusts the position size? Yes, that's the beauty of it. So watch here, we don't have any signals going on, so we might as well do this. So my risk is set at 2%. And let's say this isn't a signal, but we're just using it for, oh, you know what, let's go back. No, it doesn't really matter. This isn't a signal, but let's set it up as though it is one. So if I buy above here and what most of you do is you look at this and you say, oh, I need to get a 3-to-1 risk reward ratio. So you jam your stop in so tight, the trade has 0 chance of working out. But look at the amounts here. I want you to focus on the amount. My risk amount is $400 with my stop very, very tight. If I place my stop here at the stop strategy, oh, my risk is still $400, allowing for rounding. What has changed? Well, my position size has changed. I went from trading 9 contracts to trading 4 contracts. What if I structure the trade this way? Then I'm going to risk it down below this swing low. Okay, allowing for rounding, my risk is still about $400. What if I run my stop way, way, way down here? My risk is still about $400. But what has changed? My position size. So with these trades, let's say I'm going to be all in, all out. Which trade do you think has the highest probability of success? This one or this one? Now we're talking probability of success, not risk reward ratio. What is the chance that this trade will hit the profit target before hitting the stop loss versus this trade hitting the profit target before the stop loss? Probably the bigger stop loss is going to have the higher probability of success, right? And yet, so many of you, I see it all the time, you strangle your trades. You don't even give the trade a chance to work out. You jam your stop in so tight trying to maintain some fictitious risk-reward ratio that the trade stops you out before it even has a chance of going to its profit target. Josh emailed me the other day, and Josh, I hope you don't mind me sharing this because I thought it was fantastic. Josh got himself into a trade where, and again, this isn't the signal, but he did a fantastic job of managing the trade. You know, he set a rather deep stop to start, and the market floundered and floundered and retreated against him, and he managed to work the trade back to break even +2 or something like that. And he said, Eric, what could I have done better? And it was like, Josh, you did it perfectly. You know, you gave the trade a chance, you managed it, you got it back to a break-even position. It didn't cost you anything. You did tremendous work on that. And yet, if he had set up his trade like so many do, so that you run the stop so tight, you get stopped out before the trade even has a chance to get to its profit target. Now DTS, it's hard for me sometimes to find those examples because DTS is really good with finding immediate momentum. So we print a signal and then very often the market will take off. But you see all these yellow bars here on our hawk? That tells me we're in a sideways market. We're in some chop. Deborah's asking, does the trade manager work on the Raptor also? Yes, absolutely. The way I have it set up, I just happen to have the Trailblazer on the Raptor, but these tools are interchangeable. I could put the Trailblazer on the Hawk, I can put the trade manager on the Raptor. I may actually get to show you how it rolls the stop here. Haha, there it goes. So you see it automatically rolled the stop from here to here. And if we hit the break even trigger, you're going to see it roll the stop automatically to break even. The trade manager is the tool you're interested in, Debbie. Deborah's asking, what manages the risk? Oh no, don't apologize for the questions. Deborah's asking, sorry for all the questions. No, don't apologize. On a day like today, it makes the time go by because we're not, except those opportunities out of the gate, it looks like we might be sitting on our hands for a little bit. In fact, what I'm going to do, we're going to have a little bit of fun here. This is crude oil. We're only a few minutes from the crude inventory report. And you can see that crude trading very much sideways. And this is a very risky proposition, folks. I show it to you so that I can highlight the OCO order feature. But you can also do a one cancel others feature. And what I'm going to do is I'm going to bracket the range, and I'm going to use my support and resistance suite here. I'm going to buy above, sell below. So when the crude inventory hits the floor, I'm going to buy or sell on a breakout, and I think I'm going to run a very deep stop here. Maybe even deeper than that to start, because crude can be so volatile out of the gate. So we'll watch the crude inventory report hit the floor here in a moment. See what that does, if anything. A friend of mine likes to trade crude a little bit differently. What he'll do is he'll let the report hit the floor, let it unwind for a minute or so, and then he'll bracket the range. But very often when we're going into the inventory report like this, if I have a well-defined range, it's almost too tempting to pass. Yes, Deborah, the trade manager is the one you're more interested in. Arlen is asking, where do you recommend the stop to be? Do you give your trade enough room? Oh, to give your trade enough room. The swing points are the best places. They're the most fundamentally sound. Now, our chart style is the mean Renko bar. The mean Renko bar was specifically designed for DTS, but you can purchase it as a standalone. When Adam first came to me with the mean Renko bars, I was reluctant to use them because I was a 5-minute chart trader, right? I followed 5-minute charts. That's what I cut my teeth on. And he said, here, try these. And I tried them, and I tell you, it would be very hard to go back to a 5-minute chart. They show you so clearly the price action. They show you so clearly where the support and resistance is, who is controlling the market. Okay. Trying to make a little hop to the upside. Let's see if they get through that resistance line. All right. I'm going to disable the break-even trigger here. And I'm keeping my stop very far back because I don't trust this market. And I'm going to get another stop strategy ready here. There's parabolics. They're the most aggressive. If we start to make a little bit of ground here, I'm going to switch from my current strategy to perhaps parabolics and try to lock in some of this profit. Get up there. Come on. Boy, the seller's really trying to knock it down here. If they fill this bar to the upside, I think we're going to see it take off. This is a real tug-of-war bar. The buyers and the sellers are really fighting it out here. Come on, get up there. And Debbie asked a great question, which I'm going to get to here in just a moment. I don't know if I should bail yet. Oh no, not yet. I'll let it run a little bit. So Deborah asked, let's say I'm using the trade manager. I've entered a trade and now I want to do something stupid like manually add to my position once I'm already in a trade. Can I override the trade manager and load up? Yes, you can. So let's say you wanted to buy above this line right here, our support and resistance line. You simply right click and then add your order. Now, one thing I will mention is if you do that, it's a good idea to highlight where your initial entry was, because I think sometimes it will average your entry price, I mean. So let's see if we can't get this just a little bit closer. And what you're going to see is, if I can get a fill here, oops, here we're going to jam it in. Get in there. Come on, fill me, you stinker. What I'm trying to show you is that once it fills me, it's going to change my quantity. See now my stops, I'm running 2 stops. So it automatically knows when you add to your position. And or you could do just a buy market also. So watch what happens if I hit the buy market. I hit the buy market, now I have a quantity of 3. Right? So the trade manager always knows what your active position is. And I'll let you guys in on a little secret. The programmer behind the trade manager here, he actually designs missile guidance systems for the cruise missiles. So you know this programming is tight. And you know this programming is reliable. He's a pretty smart cookie. Yeah, Phil says that's the slowest crude inventory report ever, isn't it? Usually we see an explosion to the upside and then a retreat, but this is definitely different. Debbie's asking a good question here, but shouldn't the trade manager add to a winning position automatically? No, it doesn't, because it's limiting your risk to your account size, right? So if you take, all right, we're not seeing too much going on there, so let's park that for the moment. If you take a trade, So here's a first micro macro cross signal. If you're going to take this signal and let's say you're going to exit here at your stop loss strategy, you're already fully leveraged. At $420, that is as much as I can afford. This is based on my account. So that's 2% of my trading capital. For me to add to this, I have to get the trade at least to a break-even proposition before I can afford to risk another $400 or whatever. Right? If I add to my position now, let's say I choose to add to it right here and add another stop down here, well then all of a sudden I've increased my position another $100, right? So now I'm risking 500 and change when all I can afford to lose is 400. So that's the beauty of the trade manager. Now, if you're, occasionally the market is such that you're not comfortable jumping into the deep end with your full amount. So what you can do is you can dial down the risk amount. So let's say let's say the market's not looking right to you, there's too many yellow bars, whatever, you can enter like this, and now I'm only risking 1% of my trading capital. So a position like this would be easier to add to. Let's say I get involved, I know I'm only risking 1%. Okay, so the market looks like it's gaining some ground, I'll enter another position right there. So now I'm probably adding another $150 risk. I'm still below my 2%, what I can afford to lose. Or you can simply go into manual mode. There's also manual mode, and that will default to this quantity up here. So I currently have it set at 1. This quantity will also be active with your buy and sell market buttons. But if I go into manual mode, you'll see that it's always going to give me just a single contract, regardless of where I place my risk, where I place my stop. So if I enter up here and I place my stop down here, see, now it's $275. So the trade manager, like I said, it really, really prevents you from blowing yourself up. See down here, if I ran my trade like that, I'd be risking $500, and yet I can't afford that. That's how people blow up their accounts. I see it all the time. I had a fellow, some of you will have heard this story before, but it's worth repeating. A fellow came to me one day, and he came to me for coaching and whatnot. So he called me after the morning session. He was really distraught. He said, "Eric, I just lost $800 trading gold." I said, "How did you lose $800? I just made $1,000 trading gold." Here we are trading the exact same markets, and he loses 800, I made 1,000. Well, he was not allowing the trade manager to do its work. I had a very hard time convincing him to use the trade manager. He felt that he should always trade 3 contracts. So he would trade 3 contracts, and he would take a hit for $250. He would take a hit for another $250, a hit for another $250, and before you know it, he's down, several $100s. Whereas if you allowed the trade manager to control your risk, you can actually afford to run a deeper stop. That was the other thing he was doing wrong, is he was running a very tight stop. He was strangling his trades before they even had a chance to reach their profit objectives. Whereas I can afford to run a deeper stop, knowing that worst case scenario, if this trade goes against me, if the trade goes against me, while it would be very unpleasant to lose that amount, I haven't lost any more than I can afford. So there's a little bit of consolation in that. Besides all our tools, we tend to focus on high probability profit targets. So you can get to the profit target, get your money, get out, and look for the next trade. Yeah, like Tony says. Tony says, instead of loading up, place the trade with the trade manager and then go walk the dog, which Adam will tell you guys a story. One time he and I were in a trading room, and I set up my trade and I said, well, I got to go walk the dog now. And he said, what? You've got a live trade on and you're going to walk the dog? Well, there wasn't anything I could do with the trade. I had my profit target set. I had my stop losses in play. Why not? If I have one bad habit anyways, it's I tend to tweak myself out of a perfectly good trade. Deborah's asking, can we do a trial period for the trade manager before purchasing? You can talk to Adam about it, but generally no. That's part of the purpose of having these open house sessions, is so that you can see how these tools work. So I can demonstrate them to you. Unfortunately, the market's been a little bit on the quiet side at the moment, so I haven't been able to show you all that much, but you can see here the trade manager. Looks like we hit our break-even trigger, so since rolled the trade up to break even. And this is on our Raptor, of course. And now everybody's going to sleep. Yeah, this is how the index markets have been of late. We get a little bit of action out of the gate, and then it's Debbie's asking, will Trade Manager automatically adjust to break even at a certain profit target? Yes, you can set all that. So here, let's go to the Falcon. We'll go to the Trade Manager, and you can set your auto break even. So I have my auto break even enabled, and on my Falcon I have it set at 15 ticks. That's going to be the trigger. But yes, it's all fully customizable. You can set it at whatever you want. And they're taking their time now, so I suspect we might see a little profit-taking pullback. All right, I'm just going to make sure I haven't missed anybody's question. Oh, David's asking, can I see crude oil on the Raptor right after the inventory? Absolutely. Let me just load crude onto here and we'll take a look. Okay, so here's crude oil on the Raptor. You can see a pretty quiet day. Inventory release right here. Oh, we actually did have a double pullback signal. So we had here and here. Here's our double pullback signal coming out of the band. So a little bit of a buy. And now we're back inside this whole trading range that's confined crude oil for the last couple of days, really. Here's crude oil yesterday, another snooze fest. Very uncrude-like. Day before, crude actually had a little bit of activity. Came out of the band with a sell signal. What time was that? Oh, that was in the just going into the lunch hour. That's a little bit unusual because very often crude doesn't do much in the afternoon, but it looks like they got busy through the lunch hour. And the day before that, it looks like crude had a little bit more active day. But here's crude on the Raptor today. Not much fun, really. Not much going on. So we had a breakout there, and it looks like it was more of a blowout than a breakout. A few traders got a little anxious and nothing happened. So here's the Raptor. Debbie was asking about putting the trade manager on the Raptor. So currently I have the Trailblazer set to go on there, but I can put the trade manager on here. And I've got some preloaded templates. Just to make the setup a little easier. Once you set up the parameters the way you want, you can save them as a template. And there you go. So here now I have the trade manager. And we're not producing a signal here, but just for example's sake, so you can see how it works. And likewise, you can put the Trailblazer on the other DTS tools if you prefer the one-click entry system. Ay, ay, ay. All right, let's see. Oh, a few more questions here. A great question here from John. John asks, do you have a live trading room for the other days of the week where calls and trades are made? Yes, John. We host a trading room 5 days a week for the DTS owners. I should point out, though, that it is not strictly a call room. Part of the purpose of the trading room is also to teach you to use your tools. Because as one of our members put it so eloquently, heaven forbid, Eric, you get hit by a bus. So what that means is I do try to highlight good trade opportunities for you. However, I try to teach you to use your tools so that you're not depending on me to show you your trade signals. In fact, I won't lie to you, a lot of times in the room, when I'm demoing stuff, like I was showing you guys stuff this morning, guys like Jim and Mark and Phil and several others, they're just knocking it out of the park. So, you know, I love to hear your results. You know, I love to know that as a Raptor owner or DTS owner, that you're getting the signals, you're interpreting the signals correctly. You know, we go over things like, right now I'm looking at the Raptor here on the NQ and I'm thinking, well, maybe it's going to roll over. But before it rolls over, I need to see a test of the extreme. And a test of the extreme is, our extreme price is right here, right? That's our high. What I need to see is a test of that and then a failure. I need to see the market make a run, let me know that the buyers are trying to take the market back, and then to see the sellers squash them. That tells me that when I print a sell signal, it will have more strength to it. So that's why I'm not getting all that excited about the sell signal that we have right here. And besides, it's right into the hard edge where we normally anticipate a bounce. So those are the kinds of things that we go over in the trade room. But I do try to point out opportunities to you at the same time. David's asking, I assume you've been testing Ninja 8. How do you like it so far? No, David, I haven't touched it. I'm not one for upgrading until all the beta testing has been done. I don't want to spend my time fixing and pulling my hair out. So I'll make sure it's good and stable. I'm probably the last guy in line to do the upgrade. I'm a bit of a dinosaur like that. I was running Ninja 6.5 when Ninja 7, they finally discontinued Ninja 6.5 and I had to upgrade to Ninja 7. Arlen's asking, in your trades in the NASDAQ, what do you set as your profit target initially? This is going to be true for all the markets, regardless of whether it's the NASDAQ, the E-mini, crude oil, soybeans, gold, whatever. A high probability scalping target is $50 per contract. A high probability swing target is $100 per contract, and a high probability trend target is $200 per contract. Now, in a market like crude oil, because it is so, well, tends to be more violent and tends to have greater follow through, I'll actually double the profit objectives. But you're going to see, like here is a first micro macro cross signal on our hawk. So let's say I set it up like this. Look, we hit our high probability target and all of a sudden we turn around. You're going to see that happen more often than not. Let's see here on the Falcon. Where do we have? Well, here we had a trend change signal in the middle of the night. Or sorry, just out of the open. So let's say I set up the trade to look something like this. We hit our high probability target. Oh, it stuttered. Went a little bit further and then started to decline. And here in the Eagle, I think we probably outdid our high probability target also, but there's our red bar buy. Hit our high probability target, and then we did a little stutter step, and let's see if we took that next signal. Again, hit the high probability target, fudged it a bit, a little bit more strength there than we normally see, but a lot of times you'll be amazed at how it will hit the target and then it will almost spin on its heels. So those are your high probability objectives. Like I say, regardless of the market, however, in markets like crude, gold, the Russell, I tend to double my profit objectives. The mid cap, those markets will tend to give you a little bit more. Oh, Arlen's asking, what about the Raptor? The Raptor it draws a lot from the Falcon, so we would use $100 profit target in the Falcon, or pardon me, in the Raptor also. That would be our high probability target there. Helmut is asking, crude oil, is it a sell at 46.12? Well, let's take a look here. Oh, I think Helmut must have been watching the first micro macro cross here on the hawk. Good call, Helmut. Right there, first micro macro cross. Now, pretending real time, this one would be a little bit tricky to set your stop because there's a very good chance that we're going to see a macro pullback signal develop out of this. So I would try to run my stop at least back to the macro line, just in case. But it would have been a non-issue here because the market just fell off the map. And now it looks like we might be coming back into a macro pullback type scenario. Good call, Helmut. Okay, I think I got everybody's question. If I missed somebody's question, please shoot me a text or cut and paste it. Ay, ay, ay. Yeah, the NQ definitely going to sleep here. So now we're getting our test of the extreme. We'll see whether it turns. If it turns and comes back with a sell signal, that could be a viable sell. If it turns and bounces, that will be our double pullback. And that will give us a reason to buy. So very influential moment here for the NQ. So if it comes back now and produces a sell signal, that could be a viable sell. If it comes back, bounces, produces a buy signal somewhere through here, most likely, then that will be a viable buy. We will have had our double pullback into the hard edge, which is one of the raptor signals that we look for. Yeah, absolutely. Steve saying, I got to run. Can I have your email address? I'm going to shoot you guys my email. It's Eric with an H at supportandresistance.com. And that's Eric with an H on the end. I think Ricardo is probably all over that buy already. I know he likes to buy coming out of the hard edge bounce. I don't know if Ricardo's in the room this morning. Arlen is asking, are there any training videos we can study on the Raptor? Yes, and I'm going to shoot you guys Adam's email address. That's Adam at indicatorwarehouse.com, and Adam will be able to direct you towards some of those. Indicator Warehouse does have a YouTube channel. So if you go to YouTube and search Indicator Warehouse, you'll find a lot of videos there also. All right, well, we'll give it a couple more minutes here to perhaps come around and generate a signal. Otherwise, we may just button things up. I have a feeling that what we saw out of the gate there was the move of the day. The move du jour. Crude oil getting very tight with its range also. After that fake rally, and now we're getting a little bit of a decline, but price is still settling around that 45.75 mark. All right, you guys, I think we're going to button things up then. Thank you very much for those of you who joined us for the first time today. Next Wednesday, we will have another open house. Remember, if you are interested in the support and resistance suite, these lines are available for a discount until midnight tonight. And you can email Adam for more information on that. DTS owners, I'm going to see you in the trading room again tomorrow morning. And if you are trading this afternoon, well, I don't know, what can I tell you? The market is in an uptrend, so I guess we should focus on perhaps finding buying opportunities. But that was a pretty strong rally out of the open, and it's squashed since then, but we'll see how it goes. All right, you guys, we'll catch up with you later. Have yourselves a wonderful day. Talk to you soon.